Banks are flooding into crypto, and it's really, really important that you remain stoic, that you remain calm. In today's video, I'm going to break down how banks are officially allowed to operate in digital assets. The biggest and some of the oldest banks in the world are implementing crypto strategies, and the fact is, most people still doubt it. I told you guys from 2020 to 2025, by 2025, banks are going to be able to custody your crypto. We had the Genius Act. We're just months away from the Clarity Act, hopefully weeks away from the Clarity Act passing, which gives full rules of the road for banks to operate in cryptocurrency. And what you're going to see by 2030 is Wells Fargo, Bank of America, JP Morgan. It's going to be fully implemented. It's going to be a normal part of your traditional banking. Traditional banking is becoming DeFi. DeFi is becoming traditional banking. They have no choice, but you really have to remain stoic and calm and ask yourself, what is actually happening here? As you're told that cryptocurrency is a fraud, that it's going to go to zero, that it's just a fad, it's here now. Now, I could understand that in 2020 to 2023, but there was a stark change in 2023. Now we got BlackRock, the largest asset manager in the world, #2 holder in Bitcoin. Okay. We had XXI go live on the New York Stock Exchange yesterday, which is the #3 Bitcoin treasury. We got American Bitcoin, ABTC, about to pass GameStop. We got a battle going on here. They went from 0 Bitcoin to 4,300 Bitcoin in less than 6 months. And now what you're going to see is you had 1 Bitcoin treasury in 2020 was Strategy B, which was MicroStrategies, which was a failing software company. And now you have hundreds of Bitcoin treasury companies. The reason why we're doing that for our company and why companies are doing that, because you're in an inflationary dollar. It's not that things are getting more expensive. It's that your dollar's becoming worth less. And today is a very important day. Jerome Powell's probably going to lower interest rates. They're going to keep bringing rates down. Your dollar is going to become worthless every single day. That's why we focus on cash flow. Into deflationary assets that have fixed supplies, you have to decide which ones work for you. I'm just going to be open and honest what works for me, into protection, and then leverage responsibly to buy more assets. All right, so let's dive right in. Let's get into the nitty gritty here. The first thing I want to show you guys, which is very, 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 very important, the OCC, the Office of the Controller of Currency, banks in the United States are now officially allowed to buy and sell Bitcoin for customers. Okay, so if Bitcoin is a fraud, if it was used for money laundering, then why on earth would the OCC allow banks to buy and sell Bitcoin? And a lot of people are new to crypto. You may be new to my channel, but Bitcoin is 60% of the market. Whatever Bitcoin does, it moves the whole market. It's 60% of the market cap right now. 95% of the supply is gone. Only 5% is left. It's one of the most scarce assets in the world. And that's why companies are creating Bitcoin treasury companies. It's think about the next 100 years, your future monetary system. We can't operate in the old system. We knew new digital rails. We knew new payment rails. That's why my portfolio is based around that. Bitcoin Magazine, just in 400 billion PNC private bank partners with Coinbase to launch Bitcoin trading, the first major US bank to market with such an offering. Crazy, right? These are old banks, guys. We got Bank of America. We know this came out last week. Bank of America backs 4% crypto allocations as retail takes losses. So now what they're doing is they're going to Mrs. Jones, and they're going to be getting them exposure probably through an ETF, right? They're not going to be saying, hey, go buy Bitcoin on your own, but they're going to start offering them the IBIT BlackRock's ETF. Xrp will have its ETFs, and they'll start putting that in the portfolio. It'll probably be XRP, Bitcoin, Ethereum, Solana, and asset managers and financial advisors who push back so hard on this are now going to have to re-educate themselves and teach people a very asset class that they push people out of. Okay. Wall Street giant JP Morgan to let institutions borrow against Bitcoin and Ethereum holdings. JP Morgan Chase let institutions borrow against Bitcoin and Ethereum holding by end of 2025. A $4 trillion asset manager joins Morgan Stanley, BlackRock, expanding crypto integration. These are the biggest banks in the world, family. Vanguard, we saw this, a very, very old company, will now allow crypto ETFs on its platform. Okay. And I want to show you this. Franklin Templeton, guys. These are some old school banks, okay? We got Easy Peasy. I actually love the marketing on that. So it's Easy Peasy, Easy Peasy. This is Franklin Templeton. This is their Franklin Crypto Index ETF. If you scroll down here, check this out. We got Bitcoin, Ethereum, XRP, Solana, Doge, ADA, Link, XLM, those are all in this ETF, right? Think about this, guys. How much this is Franklin Templeton. So as we sit there, we think that crypto is not here to stay. It's this part right here, the volatility, that is really, really messing people up. Here's how winning is done. It's Warren Buffett style investing. It's not timing the markets. It's time in the markets. This is really, really important. Okay. It's not winning now. It's winning in the long term by compounding. Okay. Money compounds every 7 years at 10%. Okay. So you need the power of compounding. Now there'll be moments and times like this where our overall portfolio, if you look at our overall portfolio, went up 380% since 2020. When Trump got elected, XRP went up 800%, or Bitcoin 200%. So yes, we throw that model out of the water, but if we don't take profits, but if we don't secure those profits, and we don't understand that everything is an economic cycle. So this is how I am preparing for the next 5 years. I'm not foolish. I know this is going to go up. I know it's going to go down. So along the way, I'm going to pull some profits off the table. So here's how I do it. Okay. So this is Merlin. I'm the co-founder and creator of this app here. So here's all our assets in one place, right? So it keeps it clean. This is our demo account. Shows you all the assets in one place. It's an aggregator. And then if you go here and you take a look, you can actually set up exit targets. So when this stuff starts to fly through the roof, we calmly exit on the way up. We don't panic sell. We don't panic buy. We don't panic sell. So as things go up, we calmly take money off the top and we pull it down the risk pyramid, which I'll explain that whole thing. So for example, you can come in here and you can set up exit targets, and you set up exit targets based on obviously your dollar cost average, right? You can do a 50-50 plan, a 70-30 plan, an 80-20 plan. So when you set this up, it helps you calmly stay focused. So if you hit your first target, say you're doing a 50% exit, 50% hold, you get to your first target of $3.70, you exit 15%. It tells you exactly how much to exit. And then we send you a text like, well, how do I set up a profit taking plan? We actually help you set up a profit taking plan. If you go in here, we have the whole breakdown of it. Okay. So in the description of my video, you can download it 30 days for free, play around with it, try it before you buy it. Or in my social media platform, I'm the one of the co-founders and creators of Merlin's smartest way to track your crypto. All right, so check this out. So here's exactly what I do. Incessantly, I'm going to repeat the same things over and over and over again until my plan change, right? Just like I told you guys, I added XXI yesterday. I just got a little bit of exposure, and now I'm at a dollar cost average in. So I'll start with my system, and then I'll explain to you very transparently my top assets, and then I'll explain to you how I manage those assets. Okay, for first, it's called CAPL+DR. It's cash flow. I take my cash flow, I put it into appreciating assets. I like to focus on fixed supply assets that beat inflation. Okay, when those go up, I take profits, I put it into protection. Okay, protection is cash value life insurance that protects our principal, gives us permanent life insurance for our family to protect our family. And then it gives us L, which is in CAPL+DR, is leverage. Okay, people are leveraging off their digital assets. It's extremely volatile. 1010 2025 was a great example where they got liquidated. We leverage off of our family banks. There's no liquidation risk, comes off the death benefit. We'd like to pay it back because we want to get the cash value access again. So imagine this. So think about this. Assets go up. You pull profits, you secure some of those profits, you put into cash value life insurance. Okay, you got your own family bank. Now you have access to the cash value. Okay, you take a loan from the cash value, okay, against the insurance company at very low interest, around 5%, and then you beat the hurdle rate. Remember, it's all about beating the hurdle rate and inflation. You take that loan and you buy an asset that grows over time, and you have the patience to ride it out to the next bull run. Asset goes up, you take the profit, you pay off the loan. You now have free digital assets, or free assets. Could be gold, could be silver. Some people buy real estate, some people buy dividends. The key is when you leverage, you buy cash flow or you buy assets that appreciate. So in C is cash flow. So we created businesses, we scaled businesses. We have 6 different ecosystems and information technology, attention, and financial services. We created businesses that pay us every single day, right? I get my dividends that come in. That's active income. Okay. Everybody's looking for passive income. The only true passive income is dividend stocks, like Warren Buffett style. So I take some of my active income, I take 10%, and I put it into passive income, things like dividends. Okay. I don't want to buy more companies and keep scaling companies. 49 years old. At about 59, I want to start to kind of do, model out of businesses and write books and travel and, just be an educator for the rest of my life. And so that's something I want to strategically transition myself for the next 10 years. So as I put money into cash flow, that gives more income. Okay. So now we have 2 forms of income coming in. That income we invest Then we spend. Okay, I take the income and I put it into assets. So every single day I'm buying XRP and Bitcoin. Every single day my dividends pay me. Every single time my dividends pay me, I put it into XRP and Bitcoin. I go 70-30, right? And then throughout the week, I'm buying things like XXI, American Bitcoin. And here's my top assets. So our XRP by a long shot. We got Bitcoin, number 2. WFI just shot into the number 3 spot. WL as in Larry, FI, not WIF, WLFI. Okay. Then I'm stacking right now American Bitcoin and XXI. So my thought process is I'll have XRP, the bridge currency, Bitcoin, the digital gold. Okay. We have WLFI, the new, that's my biggest speculative one because the real world application hasn't launched yet. That's a governance token where I have access to a world bank, the new model of banking where we are the governance, we are the bank. Okay. Then we have American Bitcoin, which is a picks and shovels. And then we have the Bitcoin Treasury attached to that, which they're climbing up to number 23 already, and they're about to pass GameStop. And then XXI launched yesterday. So that's 21 Capital. Okay, they linked up with SoftBank, Tether, Cantor. He owns Strike, right? I bet you that he's going to buy out Strike with 21 Capital, and they're going to become a juggernaut. They're in the number 3 spot as Bitcoin Treasuries right now, and I think they're quickly going to take that number 2 spot. Michael Saylor and MicroStrategy is in number 1 by a long shot. I think they're at 650,000 Bitcoin. So to catch him, it's all fighting for the number 2 spot. So me as a little guy in this big old pond, I'm able to get access to their performance, and that's what I'm doing. I'm also thinking future, the next 100 years. What is the financial system going to be the next 100 years? It's not going to be the old traditional banking system. It's not going to be the old swift, clunky system. It's going to be fast. It's going to be transparent. It's going to move at the speed of light. People are going to need convenience. People operate completely different. People aren't going to be going into a physical bank anymore. Everything's going to be done on an iPhone, online. Think of how much you've advanced the last 18 years. What took 18 years is now going to take 3 years. What in 3 years from now, what took 3 years is going to take 3 months. In 3 months, what took 3 months is now going to take 3 weeks. As AI technology comes in, money is going to move at the speed of light. Messaging is going to move at the speed of light. And this is going to be normal. This is going to be a normal way of doing life. Just like I told you, from 2020 to 2025, banks are going to get involved. And here we are. I'm telling you, from 2025 to 2030, you're not even going to know you're operating on crypto. And the new wealthiest families in the world, I believe, and I'm putting my money where my mouth is, are the people who invested in the infrastructural rails. So that's what I got for you guys today. Yeah, that's it. So if you need any support at all, remember, I won't message you on WhatsApp, Telegram. We do not invest people's money. Never send anybody your crypto pretending to be us. For the 3T Warrior Academy, Coach JB will never proactively reach out to you about your crypto. We have an education platform, which is in the description of this video down below, in my social media platform. As we always say, Warriors, let's get your shit together. Let's go.